The investment plan for Europe is a very valuable initiative that enables the EIB to finance projects with higher risk. And what has become evident during the financial crisis is that whilst there's quite a lot of liquidity in the banking sector, there is an aversion to risk and there's a limited supply of risk capital to finance investments. And so what the investment plan for Europe does, it provides a kind of guarantee instrument that enables EU funds to support EIB investment and enable us to lend to higher risk projects. And that means, in fact, that we can also crowd in investments from private sector investors and from other sources, and we can therefore mobilize a far higher amount of financing than is actually made available under the investment plan itself. So the idea is actually to use 21 billion euros of funding to leverage 315 billion of total investment across all the different sectors. Now, when we come to the urban sector, there are a number of ways in which we see the investment plan being used. First of all, it can be used to finance investments in cities which are lower rated, or which have constraints in terms of their access to long-term funding because of the way the markets are or because of the capital constraints at the national level. So it enables us to lend to, let's say, higher risk or lower rated municipalities or municipal companies. Secondly, it might enable us to lend on the basis of structures where there's less security. So, for example, we might lend to a municipal company without a guarantee of the city. And for example, we're starting to do that with housing companies which are owned by cities, and we're looking at financing such investments in cases where the housing company is actually independent commercially, that we finance them on their own 2 feet. But because of the additional layer of risk, we're able to do that through the Investment Plan for Europe guarantee. The third way is actually in terms of what I've referred to as urban development funds, where we can actually use the Investment Plan for Europe to support the EIB's work in financing equity investments in urban development funds. And equity is always more risky than debt. And enabling the bank to provide a layer of support, perhaps in terms of a first loss guarantee or some other type of vehicle within the context of an urban development fund, that actually gives the comfort to other investors to come in and co-finance such investments. And that makes the EU funds and our own funding go a lot further and leverage to a far higher degree.